The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, welcome on this first trading day of the week, Monday the 4th of February. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. Great 2 hours we just had with Steve Rhodes. I hope I can give you the same sort of thing for 11 o'clock till 12. And at noon, of course, you get a great technician, Larry Pesavento, followed by, I say 1 o'clock. So that'll be, this will be an interesting show because it'll be the follow-up to what happened over the weekend. And when we are looking at all the different shows, when you get to a show that teaches you how to use your risk and your reward to best advantage, then you've got to stay tuned right through. You got 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, just fabulous shows all the way through. So I'm going to do this. I'm going to go right to the numbers right now, and then we'll talk a little bit about our shows on TFNN. Most importantly, I just wanted to briefly go through the numbers, and then I wanted to talk about some of the techniques that I use. You've got the Dow at 13,802. Now, it's interesting. I was talking about how you can handle risk. So Daryl Martin has this program that he's developed, this software program, and it's really interesting because there are so many ways. We've got the fabulous option hour on Tuesdays with Victor. That's at Tuesdays at I got to remember that. That's at 12 o'clock. So that talks about options, how you can use risk. There's another way of doing it, and Darryl comes up with another way of doing it. So this is, we have so many different techniques here at TFNN. You got, Larry talks about the butterfly pattern, the Gartley patterns. Tom talks about volume and how you're looking at volume, benchmarking certain points in volume. You got Ken Shreve, who uses Investors Business Daily techniques that he's developed over the years. You got Dave White, who has his power vector indicator. So I love this. So I just want to briefly mention, I was looking for in the ChapmanWave, you go from the lowest, most identifiable low bar, and that low bar in this particular instance is the low from 12,883, and that was, I think that was the 31st, was it? Yeah, the 31st of December. And then what happens, you've got peak A, peak B, and the whole idea is to identify the low bar. And if you have the technical chart formation, or you've got technical tools, in this case the MACD and the slow stochastic. I'm showing them right here on Tiger TV. That's the MACD right there. That's the slow stochastic. Then what you want to be able to do is to be able to identify each successively higher peak. There should be 4 higher peaks to complete that buy mode, at least 4. At that particular point, a bunch of things can happen, but it's at that point where the ChapmanWave song goes, the one that's called Buy at the Low and Sell at the High. It's called the wave goes to A and then to B, and even the anticipated C and D. That's when it flashes a cautionary light, but all you've got to do is make your stops real tight. Why? Because at that particular point, it is where the market very often has its greatest vulnerability. I waited patiently. We went to leg D on Friday to 14,019. So we broke the millennium psychological barrier. But a number of things have been happening. You've got the public coming in. You've got every single person I've heard on CNBC or anywhere else talking about the upside potential, the upside potential, the upside potential. Right at this particular moment, I'm talking about a much-needed consolidation for very important stocks. So we've got leg D. Today, almost certainly, unless there's a new high recovery high, and I doubt whether it can do it at 14,019 when the Dow is right now at 13,896, down 113. I suspect that that oval formation that I'd already drawn in 2 weeks ago is forming right here. And that's very important. Another technique that I use, I forgot for my subscribers. If you go to my webpage, check it out. I don't know why I forgot to type this up. I had it already from last week, the pattern that we were looking for, and all I had to do was fill in all the commentary underneath it. I was going to do it Saturday. I was going to do it Sunday. I was going to do it this morning, completely forgot. I don't know why. I thought I had done it, actually. But what I was looking at was that rogue wave to the upside, which is what we got. So the alternate wave count had it as a leg D in the Diamond's 120-minute chart, and I had already drawn in the down arrow. And the down arrow said, yep, we should be coming back. And the chances are we're going to try to come back to the Dow 138.30, about 138.40 to the 137.80s. That's going to be the real test. Is it going to be just a 1 or 2 day slide and we go higher? My suspicion is that it's going to be a choppy environment, up, down, up, down, up, down, and we're going to fill in that oval formation that I had already shown. This is a commentary from my daily newsletter, the opening call, and that's what I was discussing and showing for my subscribers. And I drew this in, and there's that oval body. There's the neck breaking out above the 13,969 level. Now, I'm not sure. We've just got the head. We're starting the beak, and that beak is going to come down a little bit more. Maybe test the 13,850s, 13,750s. I just don't know yet. All I have to do is let it play out because we know what we're looking for, and we're waiting for pullbacks to add to some of our long positions or to start new long positions. And yes, short positions are fine, but my bias right now is to use this pullback to be looking for some great entries on some great stocks. Now, what's interesting is the volatility index made a peak at 1443. I'd say that unless the volatility index can get into the 15s, we're probably looking at just a choppy environment here. If it gets to the 15, starts to fill that gap between 15.93 and 17.88, that's something completely different. This is an alternate wave count in the 120-minute chart. Peak G is obviously in place right now. So there again, we should be testing the recent lows of 13,870s. We'll see. I don't think this is a be in a rush market right now. I think that you can take your time, study the charts, look at what you really want to enter, and most importantly, put in your stops on either the long or the short side, and just be as, I wouldn't say as cautious as you can, but right at this moment, it's a time for reflection, just to say, hey, fantastic move up in the market, just needs some kind of a pullback. Let me just run the numbers. The Dow is down 107 at 39.02. S&P is down 11 at 15.02. The comp index is down 19 at 31.59. Now, Apple this time is, my Apple chart, where did it go? Apple. Well, just type it in here. AAPL. Apple is down 2 at 451. Hey, I think Apple's going to hold a little bit better than the general market. I think that Apple has some upside potential. Not great, but upside potential. I think a chunk of the selling has been done for now. Later, I think it starts to come back down again. We've got gold down, up. Oh, it was down about 7. Now it's up 1 at 1671. Silver's down 18 cents at 31.77. Platinum's up 15 at 16.98. And copper's down 40 at 378, 3.78. Now, this is important. Crude oil is down 96.57. Do I want to go there now? Yes, I do. Crude oil right now, I'm going to go to the CLH. And that's made a peak E, just like so many of these charts. I'm going to show them in a moment. So you've got the ChapmanWave expectation of a D, at least a D, but it can go to E or even higher. And this went to an E. It's pulling back, but the stochastic is still at 87%. It's still quite strong. So I suspect that we're getting a pullback in crude oil. I'm not sure if yet it's a real big sell-off. Now, what's really important is how are bonds going to react in this particular environment? Bonds right now are at 143 and 23 seconds, possibly making a trough G right here. If I go to the TLT, the Lehman 20-year T-bond fund, that's also a G, but unless the TLT is able to, let me just get rid of this for 1 second here. Format space to the right, make it 7. I was looking at left side, right side, price time matches. There we go. So unless the TLT is able to climb, and I mean climb, it needs to get to the 118.50. It's at 117.02, up $1.48. Nice move, but not after Friday. This is still nothing. It's just an inside bar. It needs to climb and power through. It needs to get to 120 by Friday to Monday of next week. I would even say it needs to get there by Wednesday afternoon, Thursday. And the VIX, you want to see the VIX in the 15s if you're already bearish. Now, we put on some bearish positions on 2 of the indexes. Actually, we had one short today, got taken out. I still think it's going to be a short. It was in leg D in the daily, in leg D in the weekly, in leg D in the monthly, and it really screamed to the top. I believe that it's going to be making a pullback. We took I think a 48-cent loss on a $75 stock. It's like 0.75 or something, way less than 1% risk. I'll try it again. I might try it again. But in the meantime, I'm being really cautious. We're taking like a 1 or 2%, not even a 2% risk on the short side of stocks. But on the indexes, I feel quite strongly that there is a bounce potential in the short side of these indexes. In other words, buying the short of certain of the indices. But I think it's going to be a fairly quick trade. And if it works, you just have to keep tightening the stop almost every day. I don't think this market's ready to give in substantially. I think it's ready to give in some, reluctantly. There are going to be some bounces. We're going to make some lower highs and lower lows, but I'm not sure that it's more than a week of consolidation. I don't think the market has the patience for more than a week of consolidation. I'm going to watch it closely. There are some stocks that are absolutely extended, and we'll see how they come back down. So let's go to our first corner. We've got Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Could you look at Gilead and give me your...
Yes. Now, folks, don't tell me. Oh, this had a split?
Yes.
Okay. Yeah, there's a notation. I love this. I got all the notations except they're about 1.5 inches or 2 inches away. Why? Because it's had a split. So I knew that I'd done this one. I'm going to do it real quickly now. This is trough B. This goes to A, B. This is funny. Let's see. D, leg E up in the monthly, and the stochastic and MACD are very, very strong. Leg, because it's split, I can't see it. Oh, okay. So this is going to be A, B, recycles. A, B, C, D, A, B, C, D, possibly. Yes, EF, possibly an F in the weekly. Oh, this will give me time. We're going to break. I'll redo this. It doesn't take me more than a moment. I'll redo this in the daily. So far, it's looking very good. A little toppy. We'll be back with Mike in Long Island looking at one of the great stocks on the market, the Gilead Sciences, GILD. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Basil Chapman, we are back, and we are looking at just finished. It took me just that amount of time to do the daily, monthly, weekly, going way back in the chart of Gilead Sciences. GILD is the symbol. Whoops. And it's down 29 cents at 40.26. Now, my question to you is, have you been along the stock, and what are you doing right now?
Yeah, I don't hold. It's a relative. They're along the stock, and they've sold some lower, but they still retain a position in long. So
okay,
trying to give them a recommendation on what to do.
Oh. All right. So I like Gilead right now. I think it's doing well. I think it's in for a little consolidation here based on the daily chart, peak E. I'm pretty sure I'm calling it peak E, and it's quite definitive. So that tells me that at this particular point, so it's split. Now what's really interesting, I was going to ask you, do you know how many times this is split?
Not really, once or twice.
I
know recently 2-for-1.
Yeah, I was going to say, I know that this is split before. I can't remember how many times. But right now it looks to me this is a 2-for-1 split. And is that correct, 2-for-1?
Yes.
Right. And as it stands at this particular point, now what's so interesting, folks, if you know anything in terms of looking at stocks that have split and then looking at them again, For instance, in my case, I will sometimes have one letter that's left there because my letters don't automatically come back down to the price. I have to redo the whole thing because my letters are stuck at the price point that it was at prior to the split. And what happens, I wouldn't say in every case, but I would say that it happens in so many cases that it is quite shocking how many times it's happened, because what happens is you're looking at a stock, it then splits and it makes some kind of a low, and you think, oh man, I don't know if I can buy this stock. And then you look at it again 8 months later, or maybe a year, but sometimes it's way less than a year. And all of a sudden, the old price is right there. It has doubled. Stocks that split, that are really good quality companies, tend to double again in bull markets. So I'm looking at this and I'm saying, I've got everything about it says that I'm looking at the upside. Probably it has a little more to go. If it does have a little more to go, I'm looking at between 41.40 and I would say 42.80, maybe something like that, 42.50. But then it will take a bit of a timeout. And the thing about it is that the monthly chart is still extremely good. It could pull back to 34. That's 6 points. That's a good 15-16%. That's quite a drop in percentage terms, but not really a big drop for the stock. So I like it very much. I would, very short-term basis, if I wanted to, maybe get a short just for a quick jab to the downside, 39.44, maybe 38.40s. I would rather look at the stock and see how it behaves over the coming 2 weeks, and if it really holds very well and doesn't break 38.73, that's the 9-period moving average in the weekly chart, I would just have to put this in the category of just a great stock and one that one wants to keep owning. If you've been in it a long time, I'm not going to tell you to get out. I'm just going to say to you, I would rather look at this as an add-on on a decline if the technicals still remain very strong. The stochastics at 96% in the weekly, that's very good. 94% in the monthly. That, of course, will change if it had to drop 5 or 6 points. I like it. I do think it's going to be pulling back a little bit, But at this particular point, it would be remiss on my part not to mention that there's some weakness, but it would also be an affront to anyone with a long-term perspective to tell them to do anything other maybe than to take a little bit off what you might want to put back on a 2-point decline, maybe a 3-point decline. So I do like it. And I can't tell you that I've got signs at this particular point that say that it's in for anything other than a little bit of a correction, but I don't have anything like a big sell signal yet. It could happen. I don't have it.
Okay.
So
right,
I hope that helps you.
In 2 weeks or 3 weeks on.
Yeah, because I think this is acting quite well. Thank you so much for calling, Mike. Now, folks, what I want you to do is this. I want you to go through a couple of things. I wanted to show you, remember when I was talking about the USD, JPY going into leg E, but the euro has only gone into leg D? Well, the euro made a higher high today, but it's getting a little bit toppy. I'm going to explain that. I'm going to also explain the EUR USD in the ChapmanWave. What exactly is happening? It made a peak D, sharpest pullback it's had. I'll be right back. 877-926-976-648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians. I had a couple of questions during the break. One is when I look at the DBC. The DBC is, in fact, this is the, what do they call it? I just typed it in. It is the DB Commodity Index Tracking Fund. I believe it has crude, Brent, heating oil, gasoline, natural gas, gold, silver, aluminum, zinc, copper, corn, wheat, soybeans, sugar. Doesn't have apple, does it? No, it has everything else. And it's tracking right now because it's at 28.57. Now, I think that this is making a peak E-top right now, short-term top. Technicals are really good. So 28.31 to 28.19 is the key support. Now, it has gaps, but some of these funds that have European influence will have gaps. So I'm not worried about the gaps. So I just suspect that the high that was made on Friday of 28.73, it could sneak just a tad above it, but my guess is that more likely it's going to be backing and filling between the 28.31 to the 28.19 area. Now, I'm spending a little time on the daily. Why? Because the weekly is in a counter trend, how can I call it? This is what I call a retracement failure mode. So it's an explanation of what's going on. It isn't a failure. It's just saying that the previous high of peak C in the weekly chart has had another little a buy mode going on underneath it. The stochastic's at 70%, not 80%. So that says it's a little bit weaker, and the MACD is good, but not great. And the monthly chart says until this thing can break, I'd probably say in the 29.13, but until it can really break above 29.86, that was the high of September, it's in a consolidation pattern. The moment it closes above 29.86 to 29.93, those previous highs back in March of last year, and what did I say, September, I think? And September, then it's going to be heading towards the last high of 2011, and that's back at 31.99. Now, that's going to be interesting because that will be a commodity. That would be kind of the first real inflationary aspect that we're looking at for quite some time. You've got the outstanding peak C from before, back in September of 2019 in the weekly chart. So that'll start leg D. If it's an overlapping D, in other words, in the interim period before it gets to that high of what I just said, 29.86, there was a round number open of 29. That's a heads up there, right there. Until it can do that, if it can get to 29.94, 1 penny above the March high, I would say there's a really good chance it's going to make a double top, at least to try to retest the 29.80s. So where would it break down? If it closes decisively under 28 this Friday or next Friday, over the next 2 weeks. If it closes under that, I'll say, whoops, sideways consolidation going on. Had a question about Ulta. Ulta is the Ulta Salon Cosmetic Fragrances. They changed their names a couple of times. I'm not sure what it is right now. Well, what does it say? It says Ulta Salon Cosmetic and Fragrances. Oh, that's an and fragrances. It made a peak E-top in the monthly chart at 103.52, and that was back on the September of last year. Being in a high-level consolidation. The weekly chart, same thing. It made a peak D-top. It's really stuck in a trading range. This is a fantastic action between 103 and the low of 78. I'd rather say that the low's somewhere around the 84 to 85 area. It's been in this trading range. So far, I see no reason why it shouldn't continue in this trading range. And the daily chart says, yep, stuck in a trading range until it can break above. It's at 1 ULTA is the symbol. It's at 97.50 until it can break above 100.60, which shouldn't be a difficult thing for a stock like this, which used to have some really big moves, but now it is a big deal. So if it can break above there, that'll be very important, because that'll open up the monthly chart to an interpretation that says, is that F, or is this a brand new leg, maybe B or C, whatever it is at that particular time? On the downside, if it was to break under 91, that's key 200-period exponential moving average support, that'll be very negative. So I thought I'd just get to those. Those are two questions I had. Now here's the other thing that I want to talk about. High-grade copper. High-grade copper is in this trading range. It's in leg C to the upside right now. It looks to me like it really wants to get to leg D. The MACD's strong, stochastics at 88.09. But what's most important to me is that the weekly chart had strong resistance. I didn't put that in. Let me just put that in. So that's low. Then it goes A. 1 second. So that's A, B, C. I'm calling the C1, C2. Comes back down. Okay. I just wanted to finish that notation there. This is just, even though it's breaking out right now, it's going to be very important that it gets to, in the daily chart, that it tries to get to the previous high of September the 19th, 3.8480. I think it's going to do that. So that tells me that 3.7266 is going to be very strong support. Then it should go to leg D to test that ChapmanWave inside wedge trend line. That's got resistance. Today it's got resistance 3.82. Tomorrow it'll be a little higher, 3.83, and that's the way it's going to go. So it's very important that that copper actually rises in this particular period right now to tell us that it's an ongoing improving economic situation around the world. That's the way I'm interpreting it. Now, talking about that, my big concern, just on a short-term basis, it is a big concern, but on a short-term basis. What is it? It's if you look at the housing sector index, leg D in the monthly, leg F/B, I'm thinking B right now. I have no reason why I shouldn't call it a leg. Whoops. That's a mistake. 68. Yeah, there it is. So that's here we go. Just reinterpreting. Hold on. A. That is E/B, and this is F/C. Nothing to say that it isn't still a C, but I just want to be a little bit cautious. Yeah, the weekly chart is still very strong, and all I'm looking for is some kind of a pullback in the daily, and that daily is corresponding. Look at this. You see these charts here? This is a wood. Wood is the iShares S&P Global Timber and Forestry ETF. I think it's an ETN, actually. And it's in leg F/B. The same as we were just looking at in the home builders. Now it's, the weekly chart. No, the home builders were in leg peak C, probably. So this says that the HGX index, I missed it here as well. So I'm going to do this. I like to be accurate, so this is a mistake I made. I just didn't see it. Correcting it right now. Forgive me for taking up some time, yeah? So that, I'm just moving it over. So, the home builders, the Philadelphia Housing Sector Index in ETF is in EB and FC. I'll change the color in a moment. There you go. So I just wanted to explain what I'm looking at. Wood, which is, of course, very important because it's part of the building aspect. If that is in B, it should still make a leg D, and my suspicion is going to, at this point, it's at 46.88. I think it wants to head higher. I think it wants to head at least towards the 49 to 50 area. And the housing sector index, that is in C, and I think that should be going to D. But now this is important. I'm showing here the UUP, the power shares, which it's trying to hold this base at 2171. The SPY weekly is in B, and this is the TLT. On the way down, it's in trough D. So you can see what we're looking at is the dollar is in a trading range. It's having a very nice session today. It should rally a little bit more. That's one of the reasons why I was looking at this and saying, wow, it coincided exactly with my leg and probably peak D in the SPY and in the Dow. E in the S&P and the Dow Diamonds on the daily basis. And now look what's happened on a weekly basis. You've still got tremendous strength in the SPY weekly. You've got weakness in the TLT, but it can bounce. It's been underneath the arch low. Now it's going to bounce inside. So it's 117.14. I'm guessing that it gets to 118.15, 119 something, and at 120, I'm not sure it's going to get there, but we'll see. You go one step at a time. So that's that. But here's the one I wanted to show you. This, for the week, could turn out to be peak D in the TYX, the 30-year T-bond, the T rate, the interest rate. Remember, it goes in counterpoint to bonds. If bonds go up, yield goes down. If yields go down, go up, then bonds will come down. So this is D. I was showing it last week, and D in the weekly of the 30-year, D in the weekly of the 10-year, and 5-year is D. So that says to me that because D did not go all the way to the previous high of 34.90 but stopped at 32.20, I'm going to be watching this closely, because I still feel very strongly that just like the dollar will not be able to get out of its own way, because the Fed is just determined for years now to keep it lower, whack-a-mole, bang, 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 remember? So prop on the upside for bonds. Every time bonds start to show that they're about to get weaker, I suspect bonds, in fact, the TLT should be at about 109 to 111. At this point, but the Fed is there and they're propping it up. So the normal exigencies, the normal techniques that you would use, you've got to put them aside for the moment and say, I can do shorter term trading, but the longer term aspect is an area we've never seen in the history of this country. We've never had the Fed do quite what they're doing now. So I don't know how you can put that into the mix other than to say it's an unknown, therefore I have to treat it step by step. And at this particular point, bonds look like they need to bounce a little bit. The three yields that I just showed, the 30, the 10, and the 5. 30 is white. This brownie yellow is 10-year T-note. And this is the 5-year T-note in cyan, light blue. That says to me we should be able to pull back a little bit. Now, we've got a couple of questions in the den. Let me just go there real quickly. The first one was AKAM, Akamai Technology. I have a story about this. I'm not going to tell it now because it's too upsetting. Other than I had thousands and thousands of shares at about 60 cents or something once upon a time. I thought I made a nice profit on it, only to see that it eventually went back to 30-something. I don't know what it was. But anyway, that's the story. Sometimes you can be clever by thinking you've made a nice profit and you're getting out, and this is the time you should have been greedy. So 42.53, Akamai Technologies, making a cup formation, having made a peak in the ChapmanWave at 42.53 back on the, that was around about the 2nd of January. It's trying to get back there. The weekly could be in G. I'm calling it for now a peak B with more with higher prices to come based on the monthly chart holding really well. So if you're in it, I would say that stay in it, but you've got to expect some kind of a pullback. I'd become a little cautious if it was to pull back. Wow, it's at 41.19. If it takes out 39.72, the low of the 29th, then I have to say, uh-oh, that's not good action at all. Probably it's not going to make that 42.54 to start leg C up in the weekly, not just yet. But in the meantime, I think it's just consolidating. Very nice gains. It's attempting to make the cup formation. If it does get to 42.54, that'll be leg deep, or E in the daily, once again, making a cup formation. I'd say there's not going to be too much to the upside before it again consolidates. It's just a slow mover to the upside. Higher highs and higher lows. I do like it, and I believe it will make leg D in the monthly chart at some point. It's in an uptrend. So I wouldn't interfere with that. I would not be looking at this as a short unless you just want a real quick trade, but I like it for now. So, and also they believe, I'm told, they report on the 6th. Now, is this report going to be good or bad? You know what? I'm going to do a little homework over the evening, and I'm going to look at it again, and I'll come back tomorrow, and I'll give it a pronouncement on what I think, whether it's a short. Because if it's a disappointment, and Akamai can do that every once in a while, a really big disappointment, I wouldn't. I would have a trading strategy then. So for the 6th, Akamai 6th, and today's the 4th. So I got time. So that's 2 days' time. So now there was another question in the IYT. The IYT had a spectacular move. This is the iShares of the transportation index, and they made a peak E-top with a potential falling X, but I think that's going to act as resistance right now. So the IYT, unbelievable, 85.83, this week of the 16th of November. Last week, it hits 104.49. That is tremendous strength. And I am calling it leg B up in the monthly. I don't know what else to call it. I could call it an alternate count, but that alternate count goes to D. No, I have to call it B. I have no reason right now not to call it a very strong leg B in the monthly. So looking out, it's still got a lot to do. Wow, that's the break coming up. I'll be right back. 877-927-6648. Oh, we wanted to look at the EUR USD. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. I almost forgot to mention, I can't believe I forgot about it. I'm conducting a free subscriber-only webinar. That's going to be on February the 13th, and February the 13th between 6:30 and 7:30 Eastern Time. And what we'll be going through, I've had, because there are so many new subscribers over the past 6 weeks or so. Remember, I had the CD special offer, and a lot of you have thankfully, and I really appreciate that, been corresponding with me and asking about the ChapmanWave. So you got my free opening call for a month, and many of you have been very satisfied, so you've signed up. So this is for subscribers only, and what I'll be doing is I'll be looking at the charts. I'll be looking at what I'm interested in buying, why. I'm showing the technique of the ChapmanWave. I know a lot of you said maybe we've missed some of your longer term positions. We'd like to look at new longer term positions, even though you've had some successful ones since then. But we'd like to know what you're looking at and why you're looking at it. And that's what I'm going to be going through. I'm also going to be looking at why and what I do, looking at the short side and the positions I take. That sometimes I prefer to use stocks, and sometimes I'll use indexes. Sometimes I'll use a 200% say short, or maybe as today I got a 300% short. Very unusual for me to ever use a 300% short, but it was low price. It fitted exactly what I was looking at. We know exactly what our stop will be, and we'll see if it's going to work out, because I'm not expecting that much from it, but enough to make the percentage worthwhile. So that'll be a week from this coming Wednesday night. You can see it front page. Just go to the front page of TFNN. If you are a subscriber, please be sure to be around. It will be archived, but I'm really looking forward to it. So let's go to this. I had a question about the IYT. The IYT, the support I'm looking at here, it depends on the way the MACD expands going into Wednesday. If it's still expanding, then you can expect that the IYT at 103 can pull back, and it could pull back underneath the bar of Thursday, underneath 102. It's at 103.12, certainly. So that would take it down to between 101 to 99. If there's going to be a time and price in this pullback rather than just a quick snap back and then a rally, I would suspect that you're looking at the 101 to 99 area. Then the question I had was the EUR USD. So now I'm looking at a sharp move down from peak D. This is obviously going to be peak D if there's no new high today, which I don't think there will be. But look what's happened in the weekly chart. Remember my left side, right side price time match? Well, it broke out above it 2 weeks early last week, and now it's pulling back. So 1.35 is where it's at right now. I would not be surprised if 1.33, the 9-period exponential moving average, and it's just fractionally above. I can't see it's being covered right now, but about 1.334 is the 200-period exponential moving average. Remember, if this is the first time in a while you're going over the 200-period moving average, very often you want to come back and test that strength. So in the 1.33s is really what I'm expecting on some kind of a pullback. Yeah, but the technicals are still very strong, and even though it's leg D, I'm just going with the fact that the daily has to give me a sell signal to sell mode, and it'll only do that if it goes down below the high of the 14th, which is 1.34. 1.34. So that'll be a sell signal to sell mode No, I can't even say sell mode because, look, the MACD is still very, very strong. It'll be a sell signal. It'll only go to a sell mode when the fast-moving average of the MACD crosses below the slow-moving average. And in the USD JPY, that's the currency pair. This is the dollar Japanese yen currency pair. What I'm looking at, this is leg E, and I suspect we're going to get a pullback here to form a peak E. And where it's at 92.57. I think 91.20 to 90.10, somewhere around there is going to be a test of the strength or a demonstration of the weakness. That's what I'm expecting. So stay tuned. You've got Larry Pesavento coming up, plus all the other hosts here at TFNN. My service is the opening call, and if you're a subscriber, you're going to be able to come to my webinar on the Wednesday a week. I'm looking forward.